Hello, ladies and gentlemen. Greg Mikulowski from ForexLive.com. Today's date is Monday, February 26, 2024. And this is a Kickstart video for that day where I take a look at three of the major currency pairs, the euro versus US dollar, dollar versus yen, and sterling versus US dollar from a technical perspective. So let's get started. I'm going to start by taking a look at the euro versus US dollar. When I look at this, the price action and what we're seeing trading here today, we are seeing a break to the upside. That break to the upside is taking the price above the 200-day moving average. You can barely see it right here. That comes in at 1.08258. And the 200-bar moving average on the 4-hour chart, that's this higher green line, which comes in at 1.08316. Breaking above that level was on Friday. Well, on Friday, we came up and tested the higher of those moving averages and fell off, and we had more of a up and down type of trading day in a very narrow trading range. On the downside on Friday, we did find early support buyers against the rising 100-day moving average. That's a blue line in the chart of 1.0805. So staying above that 100-day moving average kept the buyers more in control. We did test that level right here in trading last week as well and found support buyers. So overall, there was more buying interest in trading toward the end of last week. And we saw the break to the upside above the 200-bar moving averages, both the day and the 200-bar moving average on the 4-hour chart. That confirmed the bullish bias, and that is where we are in trading here today. Get rid of all those arrows. You can see where the price is currently trading 1.0858. Our next target on the top side would come in against the broken 38.2% retracement on the move up from this low right here to this high right here. That level comes in at 1.08748, and trading last week we did move above that level briefly, but could not sustain the momentum. We also did it here during other this is, I guess, 4 or 5 weeks ago. But again, the price above getting back above that broken 38.2% retracement could not be sustained for long. So that is going to be our next target on the top side. If we get above that level, it opens the door for further upside. And we'll see if that momentum can continue and get this price moving further to the upside. But make no mistake, being above these two moving averages is more bullish for the euro versus US dollar. We take a move below them to turn the bias down for this currency pair going forward. Absent that, and the buyers are more in control, and you expect more higher prices in this currency pair. Let's take a look at the dollar versus yen next. I'm going to start by taking a look at the hourly chart, and what sticks out to me on this chart is the support near the 200-bar moving average. Right here, and right here, and trading here today in the Asian session, the price came down not only to the 200-hour moving average, a green line in the chart, but also the 100-hour moving average. Both those levels were converged right here, giving traders two reasons to buy the dip against that level, and indeed they did. So they tested that level on two separate bars, and the market moved higher in trading. We are trading near the high of the day, which is running counter to what the euro is doing. The euro is moving higher, the dollar is moving lower. In this case, the dollar is moving higher versus the yen. But that's what happens, and what we are doing is moving above this high at 150.64, which were these highs right through here, going back in time. You can see, each of these highs through here end up becoming targets to get to and through. On the top side, the next level to get through is 150.71.8 to 150.77. And that corresponds with these swing lows and swing highs going back in time to this area right through here. So if we get above that level, then we'll look toward the 150.88 level, which is our high price for the month for 2024. That level goes back to this day right here. I'll get rid of the arrows. You can see where that comes in right here at 150.88. Now, if we get above the 150.88 level, just thinking ahead, if you go to the daily chart and you look 110 pips or about 100 pips later is a 151.91 level, and that level corresponds with the high price from 2023, which was reached in the month of, I guess, November. Here, that level happens to correspond with the high price going back to 2022, again, and I guess that's October as well. So double high up there at the 151.90. Here's our high price for 2024 that we have to get to and through. If we open that door, get through that level, and we look toward the 151.90. Just keep that in line, that level in mind going forward. But for now, on the hourly chart, what is key key is staying above the hourly moving averages and 100 and 200 hour moving averages. As long as we do that, the buyers remain more in control. Finally, let's take a look at the sterling versus US dollar and this currency pair. By now, everyone knows this box right through here that can find the pair for a number of different weeks through here before breaking to the downside. Admittedly, the price has seen up and down price action above and below the low of that extreme here, until last week, where the price finally broke above the level and then found support buyers against the low of that swing area. That's significant, and we saw the price got moved to the upside, but we needed to get above the 200 bar moving average on the 4-hour chart. Note how the price held resistance here, and we did, but then it failed. We came back down toward the low of the swing area before trying once again. And on Friday, we moved above that level and closed above that level. And trading here today, we did find support buyers near the 200 bar moving average on the 4-hour chart and are pushing to the upside. So guess what, folks? The 200 bar moving average on the 4-hour chart is now risk-defining level. This is a level that, as long as the price remains above that level of 1.26605, the bias remains more to the upside. If it moves below that level, then things change for this currency pair. We do need to get above the high from last week to now increase the bullish bias and start to look toward the high of, toward the high areas of this swing area right through here again. That's our goal on the top side if the buyers remain in control for the sterling versus US dollar. We will see. But right now, well, the buyers stay above the 200 bar moving average, and it's their game to lose. So there you have it, a technical look at the 3 of the major currency pairs to start your trading week. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.